Imagine a crypto where the supply is actually shrinking fast. Over 6.9 million Injective tokens already burned, deflation rate just doubled in 2026, and big players like 21 Shares and Canary are pushing staked ETF that could bring institutional billions. Yet, right now, INJ is at $4.40 with about a 440 million market cap. Most people aren't paying attention just yet. But stick with me for the next 10 minutes because I'll unpack Injective's edge as the go-to place for on-chain trading and derivatives, the burn mechanics making it scarcer every week, real adoption numbers of 2025, concentration and regulatory risks, and the exact number of INJ you need to buy today to become a millionaire in the future. This is not a financial advice, always do your own research. Eric Chen and Albert Chon founded Injective Labs in 2018. Then Injective Protocol got launched in 2020. The core mission? Build the fastest blockchain specifically designed for financial applications. Think decentralized exchanges, prediction markets, and derivatives trading. It has also strong backing by Binance Labs, Pantera Capital, Jump Crypto, and Mark Cuban, as they raised more than $52 million totally in 3 rounds and just over $7 million from the public sale. See, Injective isn't a general purpose chain like Solana. It's an app-specific L1 which was built with the help of the Cosmos SDK and Tendermint BFT consensus. This allows it to offer plug-and-play financial primitives like a fully on-chain order book and derivatives module that developers can use to launch dApps without starting from scratch. In terms of price action, currently Injective is trading at around $4.40 with a market cap of $442 million. In a nutshell, we're looking at a mid-cap crypto project with serious tech backing it. But here comes the proper breakdown. Let's see the tokenomics first, as they are a major factor you have to take into consideration before investing in any project. CoinGecko shows INJ at 100 million tokens circulating out of 100 mil supply, which is basically fully circulation. And Dropstab lists the vesting as 100% unlocked, meaning the big scheduled unlock era is largely behind the project. Injective's Genesis distribution is commonly listed as follows. About 36% toward ecosystem development, 20% for the team, 16.67% for private sale, 10% dedicated to community growth, 9% on the Binance Launchpad, seed sale of 6%, and 2% to reward advisors. The bad here is that nearly half the supply started in the hands of the founders and early investors. In the early years, this created significant sell pressure. The good, however, is that the distribution was designed to ensure the project didn't die in its first 2 years. Now that we are in 2026 though, this distribution doesn't matter as much as the burn rate. Nowadays, the focus has shifted from who holds the tokens to how many are being destroyed. The engine behind this is the community buyback. This is a monthly event where a portion of the revenue generated by the Injective ecosystem is used to buy back INJ tokens. Instead of a single winner-takes-all auction, community members can now participate by committing their own INJ tokens to a pool. In exchange, they receive a share of the ecosystem's revenue. The INJ tokens collected from participants are then permanently burned, which reduces the total supply and makes the remaining tokens more scarce. As of today, over 6.9 million tokens have been erased from existence. That's more than $30 million in value gone forever. And it's only accelerating actually. In January 2026, the community passed IIP 617, launching the supply squeeze. This update doubled the deflation rate. By doing so, INJ moves on to an accelerated path toward structural scarcity with reduced issuance and systematic burns operating simultaneously. Essentially, Injective is moving from a VC-backed growth phase into a net negative era. It's a shrinking pie where stakers and holders own a larger percentage of the network every single week. Looking at Injective's network performance, we see that it's built for low latency finance. The chain targets 0.65 second block times with instant finality, and its architecture is designed to sustain high throughput while also keeping end-to-end transaction latency low for trading-centric apps. Often cited around 25,000 transactions per second in practice, but the upper bound is at around 600,000. This technical edge has translated into measurable usage, as 2025 was the year Injective proved that it was built for on-chain finance. Across the full year, the network processed 1.4 billion transactions, showing sustained on-chain usage rather than isolated bursts of activity. On the economic side, Injective's cumulative trading volume hit $75 billion by the end of 2025. The analysis of the data shows that core, exchange and derivatives heavy activity continued to attract real flow as market conditions evolved through the year. That combination, heavy transaction settlement plus rising lifetime trading volume, suggests Injective's infrastructure is being used at scale, which is a key signal of network product market fit for trading-focused applications. Ecosystem-wise, this chain is not trying to win by having 1,000 random apps. It wins if it has a small number of serious finance apps with real users. The biggest app on Injective is Helix. It is a decentralized exchange that offers spot trading, perpetual futures, and real-world assets such as real US stocks, pre-IPO equities, gold, and other asset classes fully on-chain and permissionless. Another app is Hydro Protocol, currently the dominant liquid staking platform. It allows you to mint Hinge, which is the liquid staked INJ, so you can earn staking rewards while still using your capital in other DeFi protocols. On to the decentralization now. Injective's governance is community-driven, with INJ holders voting on proposals. The network maintains around 50 validators, which is a relatively small but efficient set designed to balance speed and decentralization. Validators face slashing penalties if they act maliciously or go offline, which aligns incentives with network security. With the decentralization factor now out of the way, before we look at the millionaire numbers, we have to talk about the risks. First is the concentration risk. The top 10 wallets still hold nearly 84% of the supply. While many of these are exchange and foundation wallets, that is a lot of power in a very few hands. Second, the regulatory hammer. Injective deals in derivatives. So if global regulators decide that on-chain perps are illegal securities, the core use case for this chain gets a massive target on its back. And finally, the technical failure. If a major exploit happens on the bridge of the core order book, the trust and the TVL will vanish overnight. Now, in order to see what we might expect from the future price performance of INJ, let's look at its history first. It launched at $1 in October 2020. Half a year later, the price hit $25 a piece, which was a new all-time high at the time. And then the bear market thundered in, of course. The token dropped 95% to $1.13. All the gains were lost. It took a couple of years till the bull run in 2023, which set a new all-time high at the impressive $52. And right now, well, the price is at $4.40, being 91% down below the ATH. After this quick trip down memory lane, let's pull up the future projections to see how many INJ we would need to retire as millionaires. Here's the classic millionaire math in 3 scenarios. First, we have the bear case. In this scenario, Injective doesn't take over the world. It simply stays relevant as a mid-tier DeFi chain. We're looking at a market cap of $2.5 billion. At this valuation, the price per INJ would be $25. And this would be more than 5.5 times move from current prices, and to hit $1 million, you would need 40,000 tokens. At today's prices, these would cost you about $172,000. Next is the base case. This is where Injective captures a serious slice of the RWA and derivatives market. We're aiming for a $12 billion market cap, which is similar to Cardano's valuation today. The price per INJ in this case hits $120. A whopping 27x gains on your investment, for which you would need 8,300 tokens and change to reach the $1 million mark. The current cost? Roughly $36,000. But that's not even the most optimistic scenario. This is where the bull case steps in. The dream scenario. Here, Injective becomes the primary settlement layer for institutional finance. It breaks into the top 10 by market cap. We are talking a $50 billion valuation. The price per INJ reaches $500. A staggering 113x on your money. 2,000 INJ tokens bought today would send us to millionaire status in the future at the current cost of just over $8,600. Now, a quick reality check though. For INJ to reach $50 billion, it has to be more valuable than some of the largest banks in the world. It is possible in a hyper-bull market, and I've seen it happen before with other projects, but it's still a massive mountain to climb. If these scenarios make you drool and you're looking for the right exchange to trade INJ on, I have a suggestion for you that comes also with a $25 bonus. That's right, CoinEx will give you a trading bonus if you register and start using them right now. They've been on the market for almost a decade and offer over 1,000 cryptos, whether you prefer spot or leverage trading. So go hit the link in the description, sign up for CoinEx now and grab the $25 bonus, guys. Looking forward, Injective's fundamentals are shifting from simple hype to deep institutional infrastructure. First, let's talk about the staked INJ ETF. As of early 2026, 21 Shares and Canary Capital have both filed with the SEC for the first ever staked Injective ETFs. This is a massive shift, guys. Unlike a basic Bitcoin ETF, a staked fund would allow institutional giants to earn that 15% protocol yield automatically while holding the asset. It's no longer just retail traders buying INJ. Wall Street is actively filling out the paperwork to own it. Secondly, the technology is evolving into a multi-VM powerhouse. Injective now supports Ethereum, Solana, and Cosmos dApps in one environment. This removes the friction for developers and, more importantly, funnels more fees into that burn mechanism we talked about. Injective has spent years building the plumbing for the world's financial system. Now, between the massive burns and the looming ETF approvals, the scarcity story is finally becoming reality. Alright, that was my breakdown of Injective, guys, and now it's on you. Comment down below your INJ price target for 2026. Let me know if you're bullish or bearish on the project and why. If you found this analysis helpful, hit that like button, subscribe for more crypto content, and I'll see you in the next one. Ciao.